Hey guys, David here from Investor Prime TV. SPY has been having a great 2021 leading into 2022, but more recently the price has just been crashing. But where is the price actually going to go, especially if you're invested in it and you want to know? In this video, I'm going to let you guys know where I believe the price is going to go through technical analysis and also give you guys some key areas to basically look out for, so key levels of support, resistances, and where I believe the price could basically get to and possibly recover from. So make sure you guys watch to the end so you don't miss any information. If you're new to the channel, welcome. It's good to have you. Make sure you guys subscribe and of course hit that notification bell if this is the kind of information that you like to see. And also give this video a thumbs up. I truly appreciate it. With that being said, let's get this bread. So first of all, before we get into the price action, part of the reason why SPY has been falling quite massively is basically the whole uncertainty around the Russia situation. You know, no one knows what's going on and could we eventually go to war. That is on the extreme side of things, of course, but there's a lot of uncertainty around it. So a lot of people might be pulling out their money and investing into safe havens like gold, etc. But nevertheless, the price has been dropping on SPY, but I believe it's only momentarily, and I'm going to explain why through the technical analysis. First of all, the price has been going so far, where it currently is at and where I believe it's going to go in the next coming days, potentially leading into weeks, and then we'll have a look at more longer term, like look at the monthly chart just to see where it could go basically the next 6 months to 1 year, etc. So on the daily chart, so we can see that the price has actually made a huge drop, right? As you can see, from $478 all the way down to $420, and then the price tried to recover back up to around 458, but since then the price is just, it looks like it's crashed back down, you know. So initially the price was actually being held by this like trendline support. So the trendline support used to be a trendline resistance back in 2021, like February 2021, and then that was broken basically on 5th of April 2021, and since then the price has just been making a very good bullish advance. Basically, it's not really rallied massively, but nevertheless the price has been increasing each time. So every time the price came back down to test this trendline support, is held very well. As you can see, came down, tested on the 12th of May, came down again, tested on the 19th of May, and then came down, tested it around the 4th of October. And more recently, the price came down, broke it initially on the 21st of January. And the bears were like, yes, we finally broken this trendline support. Let's get the price coming all the way down or keep flowing all the way down. But since then, the buyers rallied the price back above the trendline support, which at this point was acting as a trendline resistance, just like it was around February of last year. But the buyers have not been able to keep the price above that trendline support, basically keep that trendline acting as a good support. You know, there wasn't enough demand in the market to keep the price pushing all the way up to initially test the resistance around $473. So the sellers have pushed the price down back below that trend line, which is now acting as a resistance. Now, bear in mind, trend lines, they're very subjective in the nature. It all depends how you draw them, etc. You know, and there's a way you can draw them that another person can draw, and it can get mixed results, etc. But nevertheless, when drawn properly, they serve as very good support and resistances. So we'll have a look at a couple of other indicators. So such indicators are the moving average and the MACD. So we'll start off with the moving average, and in particular looking at the 10-period moving average. And the reason I've chosen a 10-period moving average is that this serves as a very good, it served me as a very good like momentum indicator. So if the price is above it, then I see the price as going to be very bullish leading into the next couple of days or weeks, etc. And vice versa, if the price breaks below it, then I see the price is potentially going to be very bearish leading into the next couple of days and into weeks. And an example of this would be when the price broke above it, basically on the 7th of October, it came back down to test it as a support, and since then it held as a support, and you can see how the price pretty much rallied from 13th of October all the way up to the 4th of November. I mean, it rallied from $433 all the way up to $470 because there was a lot of momentum pushing that price even further up. And you can see the vice versa happened when the price broke below the 10 moving average on the 6th of January. The price came back up to test it, and you can see there was a lot of selling pressure following that move. I mean, it doesn't happen like this all the time, but when it happens, it's a beautiful thing, so seeing as the price is now below the 10 moving average, I can see the price is potentially going to be very strong towards the bearish, like the momentum is going to be strong towards the bearish side. And you can see that with the price being pushed down. And a lot of this is because on the longer term, and I'll show you the monthly chart, but on the longer term, it usually means that there's a momentum shift from one side to the other. And in this case, it could potentially be from the bullish side because the price has been moving up to the bearish side. Basically, the market is going to correct itself and start heading down. So another indicator we'll have a look at just to see where the momentum lies is the MACD. And right now we can see there's a dead cross getting established on the daily chart. So this shows that basically the momentum is potentially going to start being strong towards the bearish side. Right now the momentum has shifted to the bearish side and is bound to pick up, which means that for the next couple of weeks, hate to say that it's very possible that the price is going to continue dropping. So I'm going to let you guys know where I believe the price could potentially drop to. If we then move over to the monthly chart just to see where this price could potentially fall to in the next coming months, leading into 6 months to basically a year, and as you can see, the price, if we zoom in, the price is right now has broken that 10 moving average. So on the monthly chart, we'll just wait to see if, first of all, this is a clean break, meaning that if the momentum has shifted from the bullish side to the bearish side, and if that's the case, then the price could definitely keep falling, just like on the daily chart where the price has fallen below the 10 moving average. And basically you see the next coming days where like red basically. So on the monthly chart, this could potentially be the same. So where would the price potentially fall to if the break of the 10 moving average is actually a good one? And to find that out, let's just have a look at the Fibonacci retracement. So looking at the Fibonacci retracement, these basically show key points that the price could potentially fall to, and I prefer using between the 38 and the 61 Fibonacci. If the price has been going up and you want to know where your support lines could potentially be, I like to use 38, between 38 and the 61%. And part of the reason why I like this is these actually show very good potential buy zones, or demand zones, because I'm not telling you guys go and buy SPY, no. So these are demand zones. And what I mean by demand zones is I believe there's going to be a lot of basically demand coming into the market around these points, because a lot of people may potentially be looking at these points as horizontal supports, like support 1, support 2, and support 3. So basically the areas to look out for are between, in terms of prices, between $380 and basically $316, with the sweet spot being $350. So it's more than likely that the price is going to fall down to one of these levels and test these levels, and more than likely you're going to see a recovery from these levels, basically a bounce back. It could be a case where the price comes down, touches it, and then just shoots back up, meaning that you can see a lot of wicks, basically a lot of rejections within the market, like bullish rejections within the market, and the price could potentially head back up to test the 10 moving average, and which is acting as a resistance at that point. So guys, these are the points that you need to look out for, between $380 and $316. So guys, those are the key areas to look out for and where I believe the price could potentially recover from. I mean, it might be a long wait before it gets to that, or it might get to that quickly, or the price could actually recover before it gets to those levels. But those are definitely key levels to look out for, and I believe the price is more than likely going to get to one of those levels and then get back up. If you enjoyed this video, make sure you guys subscribe, and of course hit that notification bell. Give this video a thumbs up, helps with the algorithm and all that, and also helps with the channel. I appreciate you guys for watching. God bless.